Hey, what's going on, everybody? It is James here with Crypto Common Sense, and I have your Bitcoin/cryptocurrency update for December the 10th. This is actually the third time I shot this video. Both other times I just got to rambling. So I'm going to try to keep this on point. I'm going to cover some new stuff today. We're going to talk about Bitcoin. We're going to talk about some altcoins, and I'm going to show you guys some stuff in the stock market because I really feel like a lot of people have pigeonholed themselves into cryptocurrency. And that's part of the reason that people have this anxiety level of, oh my God, I've got to get in. And what if I miss out? What if I miss out? Because they've been misled to believe that the returns that crypto provide are somehow unique and that you can't get the same type of returns in stocks. It's absolutely not the case. So before I jump into the content, please do me a huge favor. Hit the thumbs up button on the video. Don't forget to subscribe to the channel if you haven't already. And don't forget to tick the little bell icon. I do daily update videos, but I do them at different times of the day, so you can get notified when I do them. First thing I want to talk about, I really want to talk about the big picture of Bitcoin, and then we'll zoom in, okay? The reason I'm going to start with the big picture is because I saw some stuff on Facebook today that just really grinded my gears. You have so many fake experts in this space. Some of them are fake experts because they have ego problems. Some of them are fake experts because they're selling stuff. Some of them are fake experts because they just hope and pray that these coins are going to go up in value, and they figure if they can get other people on that same train, that either they can help to pump the price. And I don't necessarily think it's malicious. I don't think it's like, oh man, I got to get them to invest. I think it's more of a thing if they can do a really bullish post and they can get a bunch of likes and a bunch of comments, it makes them feel better. Like, okay, well, other people agree with me here. I'm probably right. So, long story short, without going into detail, somebody made this ridiculous post, and I thought, let's just go ahead and step back into reality. Let's look at what Bitcoin's doing. The idea that this is the bottom is far-fetched. They had this magical 50 moving average cross the 100. It's meant nothing, okay? When you zoom out, and this is as zoomed out as you can get, this is the BLX chart. It goes all the way back to 2010. And what you have on the bottom here is you have this red line which has acted as the line in the sand, if you will, for the bull bear market ever since this thing started. Anytime price gets below this line, we typically have about a year to 18 month consolidation period where price first drops and then moves sideways. That's what happened back here in 2011. When it breaks back above it, we often turn into a bull market, and those tend to last a couple of years. Just like here, it lasted from middle of 2012 all the way up to the very end of 2013. Fell back into this sub 50 zone on the RSI weekly. Had about a year to year and a half of sideways action on RSI. Price dropped down from a peak in 2013 of nearly $1,200 all the way down to about $165. Entered our new bull market. We broke above the 50 and we stayed above the 50, right? We had a false break here, a little dip back under it, and then boom, up we went. Okay, we stayed above it until the very tip top in 2017, blow off top, and then we started to head back down. Once we broke south of it, we stayed in this pocket for about a year, right? In fact, it was about 15 months. We didn't break out until April of 2019. Broke out, had this little false rally, and we're right back underneath it. We had the little false breakout, just like we did at the beginning of the 2018 crash, bear market, whatever you want to call it. And now we've moved down, okay? So if history repeats, and of course we can't know for sure that it will repeat, but we can take clues from it, right? History often rhymes, they say. Well, if it rhymes, it means that we're going to have probably a year to year and a half where RSI is below 50, where we're moving down and then consolidating. And as much as nobody wants to hear this, and by the way, I don't want to hear it either, it's just the reality of the situation, it's very possible that we do not start moving back up until the late 2020 or until 2021, right? Very possible. The peak in 2013 was in November, okay? It didn't actually start to really run up until 2016, over 2 years later. So if our peak was in the top of 2017, A lot of people are saying, well, 2020 is the year, 2020 is the year. But if this market cycle takes longer, it's very possible it won't be until 2021. Okay, so that's the big picture stuff. We have this 200-week moving average, which acted as the bottom. You can't actually see it very well, so let me zoom in. It acted as the bottom back here in 2015. It acted as the bottom in 2018. Right now it's around $5,000. I do not think it will act as the bottom this time. What I think will happen this time is I do think we'll break through it eventually. I think we'll come back up, retest it, and I do think we're going to go lower, and I think we'll put in a lower low, just like we did in 2015. Came down, made a false bottom, had a big false rally, and then a new low. Okay, so that is the big picture, but we have to play it level by level. We can't get super arrogant and say, okay, well, this is for sure going to $2,000 or $3,000 or any of that. We just have to play it level by level. At any point in time, this market could put in bullish structure. It could put in a trend reversal, and if that happens, whether it's at 6,000, 5,000, 3,000, 1,000, doesn't matter. People are always asking me, James, where are you going to go long at? What's the price you're looking for? Price does not matter. It could be 6,000 or it could be 1,000. If I see bullish structure, that's what I care about. And bullish structure, again, is basically, I want to see some consolidation preferably, where we get some sideways movement, preferably for at least a couple of months. And then I want to see, a W or some type of double bottom, some type of ascending triangle, etc. Something like we have back here. Okay? If we get a smaller W without the consolidation, I'll still be looking to go long, but I'll be very cautious about staying in that, and I'll probably look to take profits. Okay? So that's the big picture stuff. Now, if we look at the weekly chart on, say, Coinbase, we can compare this and say, hey, look, back here we came up to this line just like we did here. We came down. We had a bearish retest here just like we did here. And then we moved down to 57 or 5,800. Very possible that's what we're going to do. Right? Very, very possible. And, I think that's probably a fair expectation. If not 5,800, I think definitely down around 6,000 to 6,200 is a legitimate target. It makes sense with the bottom of our channel, which we'll look at in a second. Weekly RSI, same deal. It's in the box. Okay. Weekly charts don't change that much from day to day, so we don't need to talk a lot about that. If we look at the 3-day chart, so far this thing is working like a champ. It's been working like a champ basically since July. We had similar highs, right? They both met this resistance. We had similar lows right here in the middle of this M, or double top. This low was 38.55 on RSI. This was 39.04, very close. Came up, retested resistance, and then this thing fell all the way down to 35.97. Right now it's sitting at 39.14, so it's a pretty big drop to get down to this level if that happens. And it basically, if this plays out like it did last time, we're essentially in this candle right here. If it plays out like it did, meaning that I think this could go all the way down here, right around $6,400. Okay, so that's what that looks like. If we look at a daily chart, this thing tried to put in a double top yesterday, but it did not do it. Right? We had a neckline right here. This was up, down, up, down. It broke through the neckline, but then it popped back up and closed above it. So until that breaks and closes below that neckline, it could still try to move back up and retest resistance up around 74.30. So I've got to be careful there. On a 4-hour chart, this was very, very textbook. I took a short yesterday based on this. We were in this triangle. We broke south of it. We came up, retested it. This is what's called a bearish retest. So I did open a short position right there around 73.70. I closed that today at 72.12. It was just a little swing trade, that's all it was. I closed it down right around this area here. And for the most part, I'm out. I have a small position trade open right now. And basically that position trade, I will not close that until I feel like we are getting ready to move up. Meaning, if we get down to like 6,400, then I would look at closing that and reopening it once we move up, if we move up, right? We can move up to 8,500, $9,000, etc. Otherwise, I'll keep that open unless some kind of bullish structure forms. Okay. By the way, I don't want to turn these videos into pitch fest, but if you guys have not joined the trading course and you're interested in learning how to do stuff like this was very textbook. I posted about this in my Discord group and said, look, if you want to go short on Bitcoin, this is about as textbook as it gets right here. Okay, so this is the kind of stuff I teach, how to pick out entries and stuff. so that you're not guessing. And you can find a link to that course in the description. On the smaller time frame, the hourly time frame, it doesn't really offer anything, right? Hourly, 4 hour, all that stuff right now, I think it's pretty much just kind of, it could go either way. It leans more bearish than bullish to me, but there's no kind of divergences or anything that I'm looking at and going, okay, I just got to get into a trade. I'm comfortable waiting and, just sitting on the little position I have. And I'm also, remember, I sold all of my spot back in, most of it in June, and I actually had a tiny bit left over that I sold in July. So the only spot Bitcoin that I have right now is the tiny amount. It's less than 2.5% of my portfolio that sits on BitMEX, so I can trade with it. So, the lower this thing goes, I'm up big, real big on that trade. Okay. So yeah, I'm obviously happy as a bear right now. 5-minute chart. This purple line is that neckline that I just talked about of that M. So, I do think it's a level of support if you're day trading. It's worth watching, right? So I'm keeping an eye on that. Interestingly enough, you can see we had a very textbook M on the smaller time frame right here. And once it broke this neckline around 74.16, right, it moved down pretty quickly from there. So that's kind of Bitcoin in the picture. Remember, if we start drawing these Fibonacci trend extensions, there's a couple different ways you can draw it, but the one that I particularly like is the one that looks something like this, right? Pretty close. And basically, if this is accurate, we just bounced off the 78.6, went up and retested resistance, and it's possible that we could go down all the way to this 1, which would be down around $5,500. I think we'll probably stop before we get there, but very possible, okay? You can draw that trend a couple different ways. There can be an argument made that this is the actual trend, looks something like this. It still works, right? You have some really nice lines lining up with support and resistance here. And in that case, the 78.6 is down at 53.87, and the 1 target, the full trend, is down around $4,000, just under $4,000. I really like the way that's down there because that, of course, fills in our liquidity gap. Okay, so a couple different ways to draw that, and people often say, "Well, James, I don't know which one to use." Yeah, me neither. I don't know which one to use either, right? I draw them all, and I keep the targets in the back of my mind, and if price gets to one of those targets and starts looking like it's trying to put in a reversal, that's kind of what I use to enter my trades. I don't enter the trades based on the fib extensions alone. That would be playing with fire, right? You don't want to do something like that. So, there are different ways to draw it, and you just got to pick the one that, draw them all, and then say, okay, which one is getting the most respect from price. So that's what that looks like. If we take a look at, let's take a look at altcoins. So this is the trend that I think is in play on altcoins. No, it's not. I was messing around with that. Sorry. This is the total market cap, and I need the total 2. So let's get the total 2 here. Oh man, come on. I deleted all this stuff. I hate when TradingView puts this stuff back on there. And it's because I've got the chart open in so many windows. I know why it does it. User error. Alright, so if we draw a trend on the daily chart, this is the alt chart. It's a bit of a mess here. But if we try to draw a trend from the top, I like this move down here. Okay, well that's fibs. I don't want fibs. I want fib extensions. That is not the one I like. Yeah, it is. Sorry. Okay, so when you draw that like that, you can see that this level was well respected. This did act as support / resistance. This level has been well respected down through here around 69 billion. And this level down at the 50 level, well respected at the 61 billion mark. So it looks like we could be heading down to 42 billion next, which if so, would fill in this gap down here, right? We have this big gap. It's actually right around 40 billion, so we probably sneak through that a bit. And if this thing completes all the way, the target's actually at $27 billion. Now, full disclosure, I think the only way that alts are going to get this low is if Bitcoin loses its December 2018 low. If Bitcoin decides it's going to punch in a new low, I do think we could see alts go all the way down to this level. If Bitcoin holds, let's say it ends up holding around 4 grand, I think we'll probably stop somewhere around this level down here. Okay, so alts very, very bearish on the big picture. Somebody asked about Ethereum in the last video, so I just want to quickly take a look at Ethereum. Let's see. I think I talked about this. For some reason, I feel like I covered this in a video a couple days ago, but maybe I didn't. So let me just do it real quick. I'm going to do a 3 days so it's not quite as choppy. When I draw this from the top, I don't really feel like this is going to work too well, right? It was probably legitimate at one point. If you wanted to draw it like that, I don't think I could fault you for it. I think it's legitimate, right? That means that our 1.618 has been hit. It acted as support. We're underneath it. That means our next target is going to run 72 bucks. I don't particularly love that. If I had to draw this, yeah, it might be the best one. Otherwise, we could go with something like this. I don't love that one. You know what I mean? I just don't love that too much. Is it legit? Yeah, I mean, it's legit, I guess. Kind of. You know, there's some support over here, some support over here. So it is legit. I mean, it's not a bad way to go. $23 Ethereum seems pretty low. But that's one possibility. Me personally, man, I don't know. Seems awful low. Let's see. I like this level. Okay, so when I draw this from here to here to here, we can see this acted as support, right, through here. We had some really nice boom, perfect touch, boom, perfect touch, boom, perfect touch. This one seems to get the most play within the candles. And if we take a look at this one, 78.6 would give us a 102 target right through here, which makes sense. That was old support, and a full retracement or full trend would get us down around 65 bucks. Again, I think the $65 target only comes into play really if Bitcoin loses its old low. Otherwise, I don't think we're going to get there, right? Maybe, we never know. But right now, I think Ethereum probably will go back down to 100 bucks, right? I do think that right here there's a gap, by the way, at $96 or so. So I do think it will see sub $100 Ethereum before it's all said and done, right? Doesn't mean we won't have a bounce before then. I can absolutely see a lot of these altcoins coming down, you know, tagging this level again and then shooting all the way back up here. I could definitely see that, or even down here and then coming up, you know, back to this level here, something like that. I think that's totally possible. Okay, I want to take a look at Link real quick because there was a potential trade setting up yesterday and I haven't had a chance to look at it in the last couple hours since the daily closed, and then we'll talk about some stock stuff. So here's Link. Let's look at a daily chart. And we were watching, or I was watching, the 200-day moving average, and I said, look, if this thing gets rejected, it's going to be a bearish retest, and it could be a good place to go short. It didn't get rejected. It closed right here, and now it's actually sitting on top of the 200. So there is no short setup there. Doesn't mean you can't go short, but I'm not. Right? That's not a short setup. Going short on that would just be gambling. Okay? There is some bearish divergence. If you look right here, pretty significant bearish divergence. Look at that, right? You've got a 4-hour higher high, RSI lower low. You know, I don't know that I would call it gambling. When I look at the 4-hour, I don't think going short would be gambling. That 4-hour looked a lot worse than what I realized it was going to look. The hourly looks pretty bad. You obviously had, you know, this making higher highs while at the same time making lower highs. So that looks pretty rough. Looks like it's trying to turn over there. But I don't like the fact that it broke above that 200 daily. I don't like that. That, you know, if it had closed right around 220, 221, I'd have probably went gung-ho and probably opened up a positional short trying to get down to $1.22 or so. But as it is, I think I'll just wait. And, If I miss it, I miss it. Better safe than sorry. So that's Link, okay? Next thing I want to talk about, let's talk about stocks, okay? So, first stock I'm going to talk about is Tesla. And we'll pull that up. You see I already did a video on this earlier, but I didn't like the video, so I'm redoing it all. So this is Tesla. This is a 1 week chart. And I'm going to get rid of all these boxes and stuff. This was an old level of support. Not really going to talk a whole lot about that today. Doesn't matter for what I'm doing, right? What I want to talk about is this Fibonacci extension tool, because a lot of people feel like, first off, a lot of people feel like crypto is the only place where big moves happen, and that's absolutely not true. If you look at Tesla from June of this year to its peak in November, it actually pumped 104%. And the same time, Bitcoin went down 50%. So Bitcoin lost half its value, Tesla doubled in value, okay? So it's not just crypto where these big moves happen. Don't let people tell you that. It's absolutely nonsense, okay? If we put a Fibonacci extension on here, and we draw it from the bottom to the top of this move, and then we pull it back down to our retracement, look how perfect that worked. When price started moving back up, it had resistance here, pulled back a bit, moved up to the next level, broke above it, kind of played there, fell back down, played there again, fell back down, moved up, down, and then boom, right? Stopped right at this 1.618 extension, okay? Right at it, almost to the T. So don't let people tell you that these stocks move in some mysterious way that you can't predict, that technical analysis doesn't work, because it does. It absolutely works, right? And in fact, if I add another indicator to this chart, and we'll add a very standard 200-day moving average, look at this. It broke above it. It came back down for a bullish retest. And then after it had its bullish retest right here, it moved up approximately 41%. Just very textbook stuff, okay? And I'm not picking and choosing my stocks here. Tesla happens to be one of the few stocks that I still trade. I'm mainly focused on crypto now, but I do still do some trading on the stock market. I haven't traded since September on stocks, if I remember right. It might have been late August. I was doing some trading on Robinhood because they don't have any fees, but I was doing day trading, and with day trading in the stock market, you're required by law to have $25,000 or more in your account. So when I was doing these trades, I was buying, hundreds of shares, and there was a lot of slippage. Robinhood is actually fairly slow, so I was actually losing more to slippage than what I would lose to commissions. So I actually withdrew all of my money from Robinhood, and I switched to TD Ameritrade. But then when I started using TD Ameritrade software, it's called Thinkorswim. It's a little bit confusing, and I just never took the time to really learn it. So I put it to the side and been focused on crypto. But I need to get back to stocks, because stocks are in a bull market and crypto's in a bear market. So stocks are far easier right now. So that's an example of Tesla. It's an example of the 200-day moving average works. It's an example of those Fibonacci extensions work. Now I'm going to show you Netflix. And Netflix is a funny stock because it's basically given me two opportunities in the last 15 years to get very, very wealthy. And I missed both opportunities because I had my head buried in the sand. The first thing that happened was back in 2007. But that would have been luck, right? However, in 2012, it would not have been luck. When you look at this, this may look very, very familiar to you if you're a Bitcoin trader, because this looks a whole lot like what we had in the end of 2018 from November all the way up through April of this year. And then we had that giant green candle, okay? Well, why? Why do they look similar? Because they are both accumulation, okay? And I'm going to show you this because I remember when this happened. I don't know if you guys know much about Netflix, but basically what happened back here was Netflix decided to split their company. They wanted to start charging people to watch movies online. And then they came out with this side service called Quickster, where they were going to charge people a separate fee to get DVDs delivered in the mail. Well, of course, users hated the idea. A lot of people canceled the service, and the stock crashed as a result, and they scrapped that plan. And of course, now it's still all one service. But the stock crashed, and I remember at the time my business was doing very, very well. 2011 up to that point was the best year financially that I had ever had. I felt rich, right? I wasn't, obviously. But I never messed with stocks because business was good. And I thought, why would I mess with anything else when business is doing so well? And then that business ended up kind of fizzling out. I moved on to another business. And I've always done well with the entrepreneur side, but just a simple understanding of stocks could have changed a lot of things for me, because what happened when this got down here, right? If you look at this, this is a weekly chart. And the same stuff that works in crypto works in stocks. Watch this. There was an upward sloping trend line on RSI while price was making lower. Come on, Bitcoin. I'm trying to do a video. Just put your beeping. Price was moving down. Lower lows, lower lows, lower lows, right? RSI is moving up. What is that called? You guys know this, right? If you watch my videos, you know this. Triple bullish divergence. And this was on a weekly chart. So a person could have, based on this trend line, based on this triple divergence, a person could have taken a position, justifiably so, at, you ready for this? $7.58. That would have been the proper entry point for Netflix. So if you put, let's just, I'm not talking about putting in crazy money, like, oh my God, I'm going to put $10,000 in, blah, blah, blah. I'm talking about just conservative investments. Let's say you put $1,000 in. Right? Let's say that you paid not $7.58, but let's say that for nice easy math, you paid $8 per share. Okay, so you bought 125 shares of Netflix. Cool, not shared, shares. Now watch this. If you just sat on that and rode that through this bull market, if you had somehow sold at the top, which we could talk about, why you might have, blah, blah, blah. I don't care about that, right? If you had somehow sold at the top for $400, yeah, that would have been great, blah, blah, blah. But let's say you didn't. Let's say you just kept holding and holding. And let's say that you were still holding right now. Well, right now, the stock has dropped from $419 all the way down to $293. All right. So let's say that you said, you know what? I think I'm going to go ahead and sell that stock now. Watch this. $293 per share times 125 shares. That is a $36,625 return on a $1,000 investment. And we're not talking like a lifetime. You're talking about from 2012 until 2019. You're talking about 7 years. $36,000 return. That's a 36x, right? Or 35x basically return. Massive, massive, right? 36 grand. I mean, imagine you did put in, just say like, let's say 10 grand, right? A lot of people put 10 grand in Bitcoin. All right, well, that would have given you 1,125 shares, right? Right? Is that right? No, 1,250 shares. Jeez Louise. Easy math, and I messed it up. So that would have given you 1,250 shares, right? And you would have made somewhere around 366K in 7 years. It's pretty life-changing money for most people, okay? Very life-changing money. And we're being very conservative, saying you just held it because you didn't know what else to do. Reality is, if you knew about trading, you could have very easily sold, maybe not the top, but pretty close, because what's this? Left shoulder, head, right shoulder. There was a warning sign, but let's say you didn't sell there. Let's say you were still riding it. Top, second top. There's a double top. Confirmation right here, at like right around 320, 344, right? So there was a lot of ways, a lot of signals saying, hey, this thing is getting toppy, okay, along the way. So it's very possible that $1,000 return, $1,000 investment could have been, a $30,000, $40,000, $50,000 return. Now, here's the interesting thing. I'm going to show you something else. I just showed you Tesla, and I showed you how it went up above the 200-day moving average, and then it came down, retested it from bull side, and then moved up. Well, this orange line is the 200 daily average on Netflix. And watch this. It came down under it, came back up for a bearish retest instead of bullish, and look what it did. Off that line, it dropped about 24 to 25%. That's a massive trade, guys. That is massive. So somebody had shorted this back on July 26th and closed the short on September 24th. Boom, almost 25%. Freaking massive. Okay. So if we draw a trend target on this, I'm going to go to weekly, so it's not so wiki, right? If we draw a trend, you know, it really depends on how you draw this. I don't like that as a trend. I think I like this, something like this right here, right? And if that does indeed end up being the trend, now that it's below the 200-day moving average, it's got a target down around 184 bucks, right? And then if it gets down there, you'll have a giant M, okay? So that's one I'm watching. I'm watching Netflix because I do want to own some Netflix, but I can't buy it at $293 because, let's just be frank, there's just not that much upside left, right? I'm not saying there's not upside. It could go to $1,000 or $5,000 for all I know, but the risk reward favors a short position over a long position. So that's Netflix. We can look at, we'll look at, how about Best Buy, right? So if we take all this stuff off, geez Louise, what is going on with Bitcoin? Driving me freaking nuts. I'm trying to do a video. I keep getting that 30, but there's nothing under 30. I don't know why that keeps going off like that. Trading view is messed up or something. If we look at Best Buy and we look at a weekly chart, first let's start with the daily. It's just so freaking cliche, guys. Broke under the 200 daily right there for a bearish retest, and then it fell about 11% or so, came up for another retest, fell 35%, came up above it. Here's a bullish retest, bounced 10%, right? Here's a bullish retest, bounced 17%. Here's the bullish retest, it bounced 22%, right? Now this is over the last 12 months. There's 4 or 5 really easy trades on Best Buy stock. It just happens to be one I pulled up. Okay, so if I take a look at, let's take a look at this one right here. We'll use a 12-day chart, which is something that a friend of mine and me kind of discovered works well with stocks. If we have a trend, we moved up, we had a pullback, boom, right? There's our extensions, and if you look, right, perfect resistance, perfect support, perfect resistance, support again, boom, perfect resistance, right? So this thing does play out. Could go as high as 89.77. Pretty good. That's about a 10% gain from where it's at. Same deal though. Not super interested in going swing long on many stocks right now. This thing is really feeling toppy, but it's just, you know, I can show you example after example. We can look at Amazon, right? Amazon is one of those stocks where people are like, oh, if I'd only put, you know, $1,000 in Amazon. By the way, if you don't know why people say that, it's because after the .com crash, look at this. After this thing bottomed out down here, it actually bottomed around $5-6. And of course now, if you look at Amazon, it is over $1,700, and it peaked up here at over $2,000. So a investment, $1,000 investment, right, would have bought you, what, roughly, just say 200 shares for easy math. 200 shares times $2,000 a piece. Obviously would have been about, what, $400,000 on a $1,000 investment. Pretty big deal. Of course, you would have had to hold it for almost 20 years. But, yeah. If you look at this and you don't know anything about technical analysis, you're probably going to immediately point out that this is starting to try to form a double top. But just keep in mind, it's not a double top yet. It has to confirm, has to break that neckline to be a double top. So, you know, it's entirely possible that that just keeps moving up. That being said, I'm not interested in longing this thing. If we look at a daily chart, look what it's done. It fell underneath its 200-day moving average, came up, tested it. Once it tested it, oh, look, it dropped 5%. Tested it again, oh, look, it dropped another 4%. Tested again, oh, look, it dropped another 4%, right? Not what you want to see when you're trying to long a stock. You don't want to see the stock underneath the 200-day moving average like that. And again, if we go back, you can see this happened over and over. Right here, bearish retest, it dropped. Turn this damn magnet off. It dropped, you know, about 4.7%, came up. I wouldn't call this a bearish retest. It broke above it. Right here was a bearish retest though, right? Dropped 23%. Right here was a bearish retest. It dropped 6%, so on and so on and so on, right? Really basic stuff. That's why I always try to explain to people in these videos that trading is 20% charting and 80% emotional control, right? And what happens with most people that get them wrecked is they see something like this and they want to go big. Let's say they got a $10,000 trade fund. They want to put 10 grand on the trade. Well, if you do that, you're going to be super nervous, you're going to be super worried, and you're going to make mistakes. You know, so if you got a $10,000 portfolio and you see a trade like this, maybe you put 5% on it. Maybe you say, you know what, I'm going to put $500 on this short, right? And then you're not nervous because if it goes up and you're wrong, you might lose, you know, $50 or something. Not a big deal, okay? That being said, I have no earthly idea how long the video is. For some reason, my screen recorder has disappeared, so hopefully the video recorded. I'm going to go ahead and wrap things up there. Please remember, I am literally some guy sitting in a spare bedroom. Nothing in this video is financial advice. Nothing in this video is trade advice. You should always do your own due diligence and seek out professional investment advice before making any type of investment. Also, if you haven't already, please remember to like the video. Please remember to subscribe to the channel. And please remember to check the description for links where you can follow me on TradingView, Twitter, where you can join my free Facebook group, and where you can join my trading course if you'd like to learn how to trade. This is James with Crypto Common Sense. Trade safe.